Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Welcome to the Finovate podcast. This is Greg Palmer. Joining me today, we have Brett King, founder of Moven, author of Bank 4.0, and host of Breaking Banks. Brett, thank you so much for joining me on the show.
It's a pleasure to be back with you, Greg. So thanks for having me.
Yeah, my pleasure. So now, obviously, Breaking Banks, you usually have an hour to talk through a lot of these things. We're going to try and limit you down to just 7 minutes. I know that's going to be a challenge for you, but I think we can do it. We're going to talk about some really big pieces today.
Well, I still get to use my radio voice, don't I?
For sure. Oh, yeah. Radio voice encouraged.
Breaking Banks. Yeah, okay, good.
Feel free to break that out whenever you need to. So what we want to talk about today, obviously, there's a huge amount of uncertainty in the world right now, in fintech in particular. Coronavirus, the effect that's having, the impending recession that it looks like we are set for, has a lot of people in fintech worried. It's not immediately clear, though, what exactly this is going to mean for our industry, and there are some pieces pulling in opposite directions. What are your thoughts on how all this shifting is going to change the way fintech operates?
Well, you got macro effects. So you got the economy. Obviously, availability of credit is always a problem at times like this. So not only credit, but venture capital, private equity does tend to go to safe harbors during this sort of stuff, and limited risk. New funding, if you haven't got funding right now, as a fintech player, I'm not planning on having availability to funding for well into next year at this point. So that's the macro level effect. But then you've got the sort of broad impacts of coronavirus on our behavior, which lends towards digitization. So you've got people for the first time who just simply cannot bank the way they used to bank. They can't go to the branch. They can't use cash. They're having to change their behavior. And so this does present opportunities. So I think if you're looking at consumer tech that accelerates fintech adoption and digitization, I think there's going to be some fintechs that will do quite well out of this. Others like Slack, for example, and other players like this are doing, you can already see demand impacting them because of the work from home stuff. So I think you're going to see similar effects. But there's some fintechs that undoubtedly, either due to lack of funding or the fact that they're sort of a poor fit, or their fit is not as closely aligned with these behavioral shifts, will probably struggle.
So is it fair to say that you've got kind of this weird dichotomy of, at a time when we arguably need fintech the most, right? When people's behaviors are kind of forced to be changed, we're forced to bank digitally, you've got an environment in which it's kind of paradoxically more difficult than ever to actually get a new initiative off the ground because of the lack of credit, the lack of potential available funding. Is that kind of a okay summary of?
I think that's absolutely fair. I think this is where you had, at the end of the dot-com bubble, you had real revenues becoming the driver, for whether companies survived that and went on. And of course, many did, Google and others. But, this is not a bubble that has collapsed. It's not a fintech bubble that has collapsed. This is the entire world's economy that has collapsed here. So there's a very different reasoning when you look at this. But the net effect is still the same. Unless you've got something that adds immediate value in this ecosystem, and unless you can sort of survive on managing your money, cash on hand that you've got for as long as possible, the availability of funding, as we've seen with some of the the big fintech players who are not yet profitable, like the challenger banks as an example, they're not yet profitable. They've been able to pull in big funding rounds and continue their growth. Well, I would expect to see Monzo and Revolut and others coming out with lower growth projections in respect to their overall business, despite the fact that you think digitization might give them a bump. But they're just not going to be able to spend on acquisition. Now, organic acquisition for them will probably go up. So it may not be as bad for them as others that are more niche, for example. But credit, if you're in the credit business in fintech right now, that's going to be tough. You've got to de-risk. So look, it's a bit of swings and roundabouts, or what do you call snakes and shoots?
Shoots and ladders.
Shoots and ladders. I don't know. Yeah, we call it snakes and ladders in Australia. So I don't know.
Which is a terrifying concept, by the way, when you think about a kid's game, the idea that you just have snakes roaming around. I suppose that's good for Australia, though, because there literally are snakes roaming around. But coming back to the fintech side of things, I think you obviously remember what it was like back in the early days of what we consider to be a modern fintech era, when Finovate was getting off the ground. And we were kind of in the middle of the credit.
I remember the good old days of fintech.
Exactly. Yeah. And so a lot of amazing innovations came out of that. And if you look back at that time period, there wasn't the same amount of venture capital investing going on into the space at that point. It was still kind of deemed to be higher risk. And still a lot of these companies were able to really come out of that time period and flourish well because they spotted inefficiencies that we could take advantage of. And so, I have this hope that possibility still exists for fintech companies right now. And that in many cases, you don't have the same ability to kind of quickly scale up, but I think there is still the opportunity for the right kind of product to get in there on a more bootstrap basis.
Well, no, I absolutely agree. I absolutely agree. In fact, I know we're pre-recording this prior to this, but many will have already seen the announcement that we decided to transition out of our direct-to-consumer business in the United States as a result of coronavirus, with us losing a sizable funding round that we had already had in the can, but disappeared as a result of coronavirus. But part of that is also the fact that our enterprise business is seeing increased demand because of digitization. So we've had to change our strategy to, some would call it a pivot, but we've had to adjust to go where the demand is. That gives us the best opportunity of continuing to grow the business. Now, is there going to be life to sort of moving consumer business moving forward? Potentially, but right now, the big opportunity for us is helping to digitize banks and giving customers tools that help them manage this very stressful financial environment.
It's interesting to hear you talk about it in terms of the opportunity that exists, because I think a lot of people could hear that story and think this is kind of a defensive move. But I think the people who are really paying attention will see opportunities that are going to start to pop up right now, like you are. And I'm curious if there's any other things that kind of leap immediately to mind, any kind of big, large-scale opportunities that you think are going to become present that didn't used to exist prior to, let's say, January 2020.
Absolutely. Like, I think if you look at the consumer space, helping elderly with digitization, I think there's, people that haven't relied on digital in the past. I won't just say the elderly, but,
Sure. Yeah. It's a broader group than that.
But people who are not typically your digital users that now are sort of forced to get onto this, you're making that tech as easy as possible and sort of, guiding them through that, easy ways for them to learn. There's obviously a huge opportunity there. There's an opportunity for social credit mechanisms, so where communities come together and help people who are distressed. So we've seen this happen in developing economies, but this could be applied as equally now in the United States, especially seeing the 3.3 million unemployment figures released this week. So there are definitely opportunities around this crisis where fintech does provide some unique value, because at the heart of it, the stress that people are feeling right now is the fact that their own personal finances are under huge stress. So fintech can do more to fix this problem today than we've ever had the opportunity before. And so that's the positive that comes out of that. The traditional banking sector really doesn't have the tools beyond some short-term credit to offer help to end consumers right now. And so I think, fintech is going to really find its feet during this crisis.
It's going to be really interesting to see exactly what does start to come out of this, because one thing that I've certainly learned in my experience in fintech is that it's full of extremely intelligent people who will find opportunities, will zero in on opportunities like that and exploit them and build cool stuff out of it. Now, on the flip side, though, it's also clear that there are a new series of dangers, of pitfalls that we need to be on the lookout for. Are there any things that you think you can say, now that we've seen how this is unfolding, we have to be especially careful of X over the course of the next couple of months or even years?
Well, look, personally, as a founder and a business owner in this environment, right now, I'm concerned most about giving as many of my staff as long a runway as possible. And so I think one of the big risks here is to just think, it's going to come back in a few months as business as usual. I do think you have to really say, this could go on a lot longer. We really don't know. If you look at Hong Kong, as an example, Hong Kong appeared to be on top of things. And then you had some people returning and spiked again and they went back to stay at home after releasing those restrictions. So it could be that we have this sort of cyclic thing here in the United States at least, but globally, where you have economies going, we've got the coronavirus thing under control. You guys are good to go back to work, and then bang, we have a spike for some reason. So this stress on the system could go for quite a period of time. So if anything, I would encourage the founders and the business owners to be a little bit more conservative here and not necessarily just think it's just going to come back in a few months and it's business as usual. But the other element is, I really look at your sources of credit. Look at where you can get availability of additional funding, federal sources and things like that. So, start looking at those things as risk mitigation strategies as well, because, if this does extend, then, those sorts of vehicles are going to become important for hygiene. There we go. We got the bell.
Yeah, that's the bell. But I think it's worth kind of just tying a bow on this because, I think you're spot on that there's going to be an increased importance on resiliency and the length of runway. And, for anybody who's watching this, I think it's really impossible to say what the future holds. And the organizations that are going to navigate this well will be the ones who are most well equipped to deal with that type of unexpected situation. And I think this is again an area where fintech really does have something we could show to the world and can really find some good opportunities there. But there are clearly increasing importance being placed on being able to kind of wait this out and being able to survive whatever comes, because we just don't know what that looks like.
Yeah, absolutely.
Well, thank you as always for coming on to the Finovate podcast. I look forward to talking with you again on breaking banks at some point before too long. And with any luck, we will be back in business as usual by the time Finovate Fall rolls around in September. As you say, it's good to have contingency plans in place. But yeah, we can all hope. And in the meantime, good luck with the shift with Moven. And I look forward to seeing how everything unfolds there.
Thanks, Greg, and continued success. Stay well. And for all the listeners out there, stay safe.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.